Good day, folks, and welcome to Best Trade Setup. In this video, I'm going to go through the trade that I took on the 15th of September 2025 and a little bit of a trade from the 16th, which was yesterday, September 2025. So, right off the bat, I want to say the only pair that I trade, rather, is the Euro USD. I only choose one pair because the amount of work that goes into analyzing the chart does take a bit of time and a lot of concentration. I scalp, so I need to pay attention to every single candle movement, and I find it very easy for me to do that on one pair. It's something that's up to you as a trader how many pairs you want to look at, to each their own. As long as it works for you, that's the main thing when it comes to trading, to find something that is profitable for you. So here is where I took the trade on the 1 minute time frame based on a retest of this 15-minute level with a three candle pattern engulfment. So entries that are based on a three candle pattern or W pattern come only after the 5 minute time frame has confirmed entries. Now, and also the 1 minute time frame, the trades should always be in line with the 15-minute bias. So if I'm taking buys, that means on the 15-minute time frame, we have a bullish bias. So we're going to start all the way from the top, and I'm going to show you my befores and after. I did move the stop loss a little bit forward because you can see here it's 7724 and here it's 7727. Stop loss is still in the same area, 1 minute time frame. Price did reach the take profit area and then turned around to go down. This was the high of the day. At this point in time, it had reached the high of the day. So we have the 50-minute time frame. The trade that I just showed you on the 1 minute time frame was taken from here, and price reached all the way up to here. These lines here, the red lines and the green lines, you'll have to excuse me on this one. It was supposed to be a red line, showing if price moves below this level, we are in a bearish bias, and if it moves above the green line, we are in a bullish bias. I do have a lot of lines on my charts just to see where the levels are. This is the 15-minute order block. If it's a yellow line without the OB, it's a 5 minute order block. These white lines here are support levels on the 5 minute time frame. On the 15-minute time frame, the highs and the lows are these thick dotted lines that are green or red. I'm going to show you a bigger or a wider view of the chart. Right here is an order block from here to here all the way to here. And I have this rule where we don't buy into an order block unless we have two trade opportunities confirmed in the direction of the order block. And also, I was confident enough to take these trades here, even though we were in the order block area, because one thing about an order block, the more we see price tapping into it, the weaker it gets. So as you can see here, it did tap into it, and then eventually went down. So I was really feeling that the strength of this huge order block wasn't going to hold us back in price moving towards the upside. Now we have the 5 minute time frame right here. I want to briefly show you what I call the consolidation above peak formation low. This is the consolidation. This is the peak formation low. This price action pattern shows that price is most likely to go to the upside, but you just don't enter it at the break of the consolidation. There has to be things that we look at within price that shows us a valid entry to the upside. I do have videos that have explained in detail and showed multiple examples of this consolidation above peak formation low. The reverse of this would be the consolidation below or after a peak formation high. This is the line chart just to show you this consolidation here and then price moving up. Now a closer look, we're on the 5 minute time frame right now, and I know this is a fake out. But in my strategy, it's a valid fake out that I consider to be one of my confirmation signals if it's made from two candles or it's a three candle pattern and a W pattern. If it's not that type of fake out, I really don't count it in, even though we see price did go below this level and close back up above. It's just how I do things and how I just look at my my charts and how I just count up the confirmations. So what we see here is price did go above this order block here and this order block that was formed here. Whenever price breaks out of a consolidation, it does form an order block. And the upper boundary of the consolidation becomes the boundary of the order block. So whenever price closes above an order block, that is a confirmation signal that we have to count in. So we see 1 and 2 right here. So that's two confirmations. And then price taps into this order block and does a pullback. Whenever we see a pullback, which is two bearish candles at least, we restart the count because now we have potentials of going down. So you really don't want to stick to a bias while price is showing you clues of it possibly going down. And then price does come to this level right here, which is a 15-minute resistance level. This goes down and then closes back up. These yellow dots here shows that I'm signaling more than one inside candle inside the range of this candlestick right here. So it's basically consolidation. So I really don't pay any mind to the candles that are within this candle's range. So here it's a valid fake out because we have this candle and then this one that breaks out of the range of this one. So we now have a break and retest because price went up, came back down, break and retest, and we have price going back up here at the order block and then another pullback. So that means we have to restart the count in regards to looking for bullish confirmations. This two right here means there are two confirmation signals that we see here. When I enter my trades, I look for 6 or 5 confirmations depending on where price is. If price is having a resistance level below an order block and price is just doing whatever it's doing within that resistance level, we look for 5 confirmations. I do have previous videos where I show examples of such, and since this is not the scenario here, we look for 6 confirmations. So we have 2 here, 1 here, and then 4 right here. Now the 2 confirmations that I was talking about here is the break and retest and the 3 candle pattern. Even though it's made of 4 candles, my maximum is 4 candles, the minimum is 3. It's still valid because when you open the candle here and close it here, we have a pin hammer that has formed, which is a rejection signal, and it's happening here at this resistance turn support level. And then we have price closing above this order block. Remember, lower boundary, upper boundary, closing above the order block, and that is a confirmation. And then we have price break and retest in the form of a 3 candle pattern, engulfment, ENG at the 50s level. So those are 4 confirmations. So price action does show us that we have bullish potential, but where do we enter? We wait for price to close below the 20 EMA and then close back above it on the 5-minute time frame. And then because right here we have price already above the 20 EMA. If this was happening below the 20 EMA, let's say it was somewhere here, we would wait for price to close above it, and then that would be our entry signal. But since we don't have that on the 5-minute time frame, we can't enter on the based on the 5-minute time frame. But on the 1-minute time frame, we do have a close above 20 EMA right here for us to go into our buys. Now, why is this not a confirmation? Because whenever you have a candle that crosses a significant level, candles that come after it that are within its range, that are within the candle's range, are candles that I call inside candles. And it's a form of consolidation on the lower time frames where I think price now is not really giving us any clues or definite clues as to where it might go. So we pay no mind to it. So since this candle right here is inside this range and this candle because it's at this level, we don't consider it. So basically price did close below this level and closed back up with this one. But these 4 candles do not form a 3 candle pattern because the thing with the 3 candle pattern is it could be 3 candles like this being a bearish one, bullish, bullish, or bearish, bearish, bullish. But if it's made up of 4 candles, the first 2 candles must be of the same price movement. If it's down, then it's bearish, bearish, and then the next two should be bullish, bullish. But we have one bearish and one bullish. So even if we were to add up these candles and it forms a pin hammer, it's not valid because I need it to be split between the two, between the 4 candles where we have two bearish and then two bullish. And then price does continue going up on the 5-minute time frame and taps into this order block. So Here we have two candles pulling back, so that means we have to restart the count. All of these things that are signaling bullish for us, we're just going to disregard them and restart the count again. So in this case, on the 1 minute time frame, we did have a close above the 20 EMA. So even on the 5 minute time frame leading up to this, it's only concerning the 1 minute time frame off of the first interaction with the 20 EMA. And I will show you that in the next slides that follow. Now we have the 5 minute time frame here, and I did mention what these nodes are showing. You can feel free to pause and then just digest what's going on here on this chart. We do have the 1 minute time frame. Remember this white dot I told you about? The white dot on the 5 minute time frame shows one inside candle, but if it's yellow like this one, it shows more than one inside candle inside the range of this candle right here. And then we have price after we have confirmed the price action that okay, indeed we have potential buys coming in on the 5 minute time frame. We signal it with the yellow line, I mean with the green line, green vertical line. Price then closes below the 20 EMA on the 1 minute time frame, then closes back above. So once it does close back above the 20 EMA, that's when we place our trades and go for a 1 to 1 or at most 1 to 2. On the 1 minute time frame, price does have the potential of reaching a 1 to 2 risk to reward, but on a 5 minute time frame, we I just aim for a 1 to 1. Now, this is the next slide right here. This is where I took the 1 minute buys that I showed at the beginning of my presentation. And we have price pulling back here when we have to restart the count. So you see this red number, meaning we have four confirmation signals to the downside, which is a sweep W pattern, well, a sweep M pattern, three candle pattern in the form of four candles at the order block area. That means two bullish candles, two bearish candles. When you start here, open up here, and then calculate the distance to the bottom of this wick. We have the upper wick being more in length than the body and the lower wick, so that is forming a pin hammer. This is a pin hammer right here. So all these four candles are forming a bigger pin hammer, showing a rejection of this level right here. We then have price closing below this 5 minute order block that was formed, going up. That's now 4, 5. So we need six confirmations because this resistance level is not below the order block. If it was a situation like this one right here, and this was happening here, we just need 5 and then a close below 20 EMA to enter sells. So since we don't have that, we only have 5 confirmations to the downside. Price then reaches this order block and then pulls back. Once we pull back here, just like we were doing in this space here where we have a pullback, we now have to restart the count in regards to sell confirmations. Once price pulls back when it touches the 5 minute order block right here. So we have to restart the count. Price then restart the count for sells because there's a pullback from order block. Price then goes back down here. We do have an inside candle here and an inside candle here. Once we have these inside candles, we just completely ignore them. We do have now a level of support, this 15-minute level right here. Price does break through the structure on the 5 minute time frame, but it doesn't do that on the 15-minute time frame, and I will show you that in a couple of minutes. Excuse me. So now we have price going through 1, 2, 3. The chances of it going below these three order blocks without two confirmations of sells is very unlikely. We need confirmations in the form of two sells above the order blocks, above this order block, just for this one to reach this level. And we need two more confirmations to reach the bottom of this order block, and then another two for this one. So the resistance for price to go down is really high on this one. So what we're going to do here, we notice that price closes below the bottom of this 5 minute order block that was formed right here. We close below it, back up, ignore this, we go down, ignore this, we go back up and close above it. We have a fake out in the form of a W pattern, valid, and every fake out comes with a W pattern because this would be the first leg and this would be the second leg, and the second leg is in the form of a W pattern. So we have three confirmations so far for price to go to the upside, and we have all of this happening at this order block, this one and this one, so one, two, three, plus the three confirmations that we saw here. We just need five, but we got six. And then we have a close above the 20 EMA. Now, this is when we enter buys, and excuse me, and our stop loss would be below this area right here. So our TP would be a 1-to-1 risk to reward because we are on the 5 minute time frame. Price then, you can see this candle is at area, this significant area. So that means any inside candle inside the range of this candle, we just ignore it. So right now, what we see is, excuse me. So right now, we see that there is no entries on the 5 minute time frame for buys, but there is on the 1 minute time frame. We already confirmed. We have a confirmation of buys on the 5 minute, and we have price on a bullish bias on the 15 minute. So that means buys on the 1 minute time frame are valid, and that's something we should look to take at significant levels of the 5 minute and the 15 minute level. I will show you an example of when we can take our trades based on the 1 minute support and resistance level. I'll do that at the end of this presentation or video. So what we have is right here. And then we're going to drop down to the 1 minute time frame. These are the buys that we had, the first buys on the 5 minute time frame. Now we see one, two, three, four candles. This is a three candle pattern. When you start here to the tip of this wick, we have the body and the upper wick, the length of them being shorter than the lower wick. So it is a rejection candle that's being formed. And then we enter a trade right here for a 1 to 2 risk to reward. As you can see, price even gave us more than that. Now, this is not where I actually took the buys. This is another buy that is below this 5 minute order block. Let's go back here. This is a second trade opportunity below the order block that was formed when price broke below this level. So when this happens, that means there's a high possibility that price will reach the high or the upper boundary of this order block right here. And it does do that. That's why I also took this trade right here, because it's another signal for us to enter, and we also have the momentum coming off of these two for price to go right here. And on top of that, when we take trades on the 1 minute time frame, most of the time it's going to cover a 1 to 2 risk to reward distance. So I was very comfortable taking these buys right here. These are the buys, three candle pattern at this significant level on the 15 minute time frame. Why this level is so significant? Because on the 15 minute time frame, what we notice is this level right here is also formed by this one. When you look at the level, when you look at the price, it also falls at the very tip of these wicks. So I was just comfortable extending all the way from another level from this side all the way through here. There is no pullback between this high and this low. That's why it's still valid to use this level on the 5 minute time frame and also on the 15 minute time frame, because there's nothing disturbing it on the 15 minute time frame. So we can still use it on the 5 and the 1 minute time frame. So that's why I took the buys from here for a 1 to 2. Price did actually go a little bit more, but cover the distance that I was intending or anticipating for price to reach. Now we have the 16th of September 2025. I'm showing you the trade that I took based off of the 1 minute time frame, as you can see right here. And then price eventually reaches, take profit, and then does a little reverse. And I'm going to show you what made me take these trades right here. We do have this price action here that I showed you earlier on. And I want to point out that we do take trades on the 1 minute based on the 5 and the 15 minute highs and lows, but there is an exception when we take it off of the 1 minute time frame, and it's that we need two confirmations on the 1 minute support level for us to enter trade. Two, not just one like on the 5 minute time frame. We need two, because the 1 minute time frame is it moves quite fast, so you need so many confirmations to enter a trade based on the 1 minute time frame. So what we see here, please take note of the fact that this level is 8388. So we need candles to close above and below, not on the line. If it closes on the line, we don't count it in. So we close below and then close back up. But it's not in the form of a three candle pattern. So we don't count it as a valid fake out. And then price goes back down here and then back up here. Now this forms a multiple bottom, and that is valid enough for us to consider as a confirmation. But we need another one to enter into buys. We have this one closing and then closing above, but it's not in the form of a three candle pattern from start to finish. And then we have to look at what happens next. And price does close back above here. This is multiple bottoms and then another multiple bottoms. The reason why I separate these two is because we have more than two bullish candles going up and more than two bearish candles going down. If it's a minimum of two up and minimum of two down, we are able to separate the price action between the two. And then we enter our buys right here. We then move forward, move forward, and here is a three candle pattern. If you start counting, let me just bring and show you exactly. We need the lower wick to be more in length than the body and the upper wick. So when we start counting from the start from here to the end here, what we're going to do is the low of this, the close of this bullish candle up to the high of this is 0.7, and when we measure the wick right there is 3.1. So it's more in length than the upper body and the wick. The reason why I started here is because just look at it. If we're going to form a candle from these three candlesticks, it only makes sense for from this point here to this point here to be the body. If this candle had an upper wick, it would start from here at the close of this bullish candle till the high of the wick for that to be the body and the upper wick versus the lower wick's length. And this is happening at this level right here. The dashed green line is the high of a previous day from way back when. I think it's around 2021 September, around that time. So we only need one confirmation because it's a higher time frame level. We need two confirmations if it's on the 1 minute time frame. So we do have this 1 minute high right here because when you I use the magnetic function here. This is the high, and I'm just gonna show you exactly why. So this level right here is 8474. We have this wick going above this level, and it closes above this level. If you look at the close of this candle, it's gonna be, look right here, it's going to be 8477. So the wick is above this one and the body is above the bodies of this wick. So the highest wick and the body of that wick, this is higher than that. So we did break structure on that level here, but we also broke structure in this one right here. Remember, the level is 8474. The high of this bearish candle is 8475, which is more, and the body closes at 8454, where the body closes here at 8428. So let me just bring it back here, right here for you guys to see. So since it broke above this level, this is the next significant level on the 1 minute time frame, right? And then we go up, and then we go down, we go up again, and then this becomes another significant level. So since there's no movement, no pullback between this area here and this one here, we can still use this as a significant level, but it's on the 1 minute. So we need two confirmations for us to go up. So we have a three candle pattern and another three candle pattern right here. So we can enter buys in this area as well, because when you look closely, the level is 8488. This bearish candle opens above the line and closes below it. Does the same thing here. and then right here. So we have a three candle pattern and then a three candle pattern. And we actually have two confirmations here. There's a pattern that I like to call the pin hammer after a three candle pattern. Whenever you have a pin hammer after a three candle pattern, it's another confirmation in itself, this pin hammer. If it's not after a three candle pattern at a significant level, we need two pin hammers so that it's equal to one confirmation. I know I'm saying a lot of things right now, but I will continue repeating the same things with every single video that I'm making. I want my strategy to be so mechanical and systematic that if this is that, then we enter a trade, and if it's not that, we don't enter the trade. So that is the reasons why I took this trade right here. And on that note, thank you so much for listening in. Take from that what you will, and I will catch you all on the next video. Till then, trade well. Cheers.